Well, the auto sales figures for the month of February were largely in line with consensus estimates, largely in line with estimates that brokerages across the board were witnessing, and some of the trends that we at ET Now had indicated true have panned out as expected. Now, what Morgan Stanley is saying is that recovery trends continued as almost all of the OEMs posted sequential growth. Electric two-wheelers formed close to 0.5% of the total industry sales. They expect OEMs to hike prices to partly offset commodity headwinds. February auto data, according to them, indicates a sustained recovery in trucks, while passenger vehicles continued with a strong growth momentum in February. According to Morgan Stanley, shortage of containers led to a miss on export volumes, and given the volatile ways, the year-on-year growth numbers had a sharp contrast across two-wheeler OEMs, but on a two-year CAGR basis, volumes witnessed a slight decline. Three-wheelers continued with steady sequential recovery, but remained significantly below pre-COVID levels. Semiconductor shortages are likely to impact auto production in the near term, as this is what Morgan Stanley believes. However, what they are saying is that given the fact that commodity costs are rising, they expect OEMs to hike vehicle prices from early April onwards. Their top picks and their preferred picks amongst the OEM space remains Mahindra and Mahindra, Bajaj Auto, Maruti, Suzuki and Eicher Motor, while Motherson Sumi remains their top pick amongst suppliers. Maruti's sales volumes were up 12%, and what they're saying is that on a two-year CAGR basis, sales were up 5%. Exports grew in line with domestic sales at 12%. LCVs continue to witness strong growth on a lower base, while sequentially it was down almost 24% on a month-on-month basis to 2,700 units. Utility vehicles reported strong growth of 19%, while compact car and van sales volumes increased 15% on a year-on-year basis and 6% on a year-on-year basis respectively during the month. What they are also saying is that discounts continue to remain lower on a year-on-year basis and will partly help in offsetting the cost headwinds. We're talking about M&M and the tractor sales. Tractors continue to witness very strong year-on-year growth during the month. The utility vehicles surprised positively with 44% year-on-year growth, while the underlying demand remains buoyant. Morgan Stanley says that M&M's LCV portfolio witnessed a 42% year-on-year decline due to supply chain issues. Royal Enfield, remember, exports for this one really doubled to 4,500 units during the month, while domestic sales continue to witness a steady growth of 6.5% growth year-on-year. The order book for Royal Enfield stands at over 100,000 plus units as against production of 75,000 units per month currently, again indicating a slight supply-demand mismatch. They expect a monthly run rate of 71,500 units in FY20. Now, electric two-wheelers, they continue to believe that Hero Electric remains the largest EV OEM with 2.1 thousand unit sales in February.